Today we're going to talk about one of the most commonly asked questions. Where do I get in? Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. End of the week, it's the weekend now. Opportunity to review what we did well, what we could do better, and obviously anything that we have learned from this week, not only about the market, but about ourselves in terms of how we performed in live time, how we executed, how we prepared, all the little things that will make the difference for us in the coming week, for me. So we talk about our simple system, and we're going to review some stuff today. I keep getting a lot of similar questions about, I see the setup, I see the structure, I see the pattern, I see the high and low, and I got the timings and the 12 candle window, but where do I get in? So we talk about engulfments and pin hammers, but the simple things need to be remembered. We talked about focusing on where is the money, where are the profitable trades. We talk about the three things that markets do. We go over the basics every single day because slowly, as I'm getting a lot of feedback, people are starting to realize that basics are everything that you need to understand. And then it comes down to what you do in live time. So one of the most commonly asked questions is, what are your back testing results? Even if you have my back testing results and you have back testing results, your live performance will probably be nowhere near what your back testing results look like. Your performance in live time is going to boil down to all the little things that you do yourself, like we talked about the other day in the daily routine, all the little things that will make you keep getting better at performing in live time, but just being at your best in general at everything. So where do I get in? Two things that we talk about over and over again are the numbers and the timings. Forget the patterns for a second, forget stop hunts. When I go to the screen, what I am looking at are the number boxes, the 25 pip increment boxes. I'm looking at numbers. No matter what I want to do, I want to try and get filled at the numbers. If the market pins to a number or pulls away from a number, I'm going to fight for the best fill. That may be the close of the candle. It may be at the next level if the market hasn't confirmed my thesis yet. They may have gone high, but that may be could still be a breakout, even though it's a stop hunt. We don't know that maybe until it breaks back inside of a box, a 25 pip box. They may have hit the high of the day just above 25, and it looks like it could be a trend, and then bang, they pull it back inside and then come back into the numbers for a move down. Numbers. That's my first thing. That's the first thing I look for, is where do I want to get filled in terms of the numbers. Think simple. There's not a whole lot. If you really break it down and think simple, you can put indicators all over your charts. You can talk about fundamentals. You can talk about commitments of traders reports. You can talk about Ichimokus and everything else. I don't know. I'm sure those all work at varying times, but at the end of the day, the market trades off of numbers, specifically quarter levels. Round numbers, usually these trades will be from zeros and 50s. They may go to a quarter level. That will typically be a stop hunt. So you may not get filled at a quarter level, but you'll get filled at the round numbers for the 50 pip or 100 pip move from number to number. So step back again, just relax. Remember, don't chase the price. Don't chase the candle action. Focus on what's going on. Markets do three things. They break out, they pull back, and they trend. So let's imagine it's a 25 pip Asian range. It may be 25 pips sideways, okay? Well, you're inside of a 25 pip box between 75 and 0. They may break out and pull back into the numbers for a move down. They may break out of that box and pull back on a stop hunt inside of the Asian range for a continuation up to the top of a 25 pip box, where they may, again, hit the stops 3 times or hit the numbers 3 times, hit the high, hit the high, hit the high, and drop it down. But you're inside of 25 or 50 pip boxes. If your trading range for Asia for the day before we go into London is 50 pips, then you're inside of a 50 pip box. That doesn't mean they're not going to hit the stops if the high of the day is outside of that. That doesn't mean they're not going to hit that, but you want to be thinking, is it a breakout pullback for a trend continuation? Is it a breakout pullback for a false break reversal and a trade back in the other direction? Or is this just a range-bound market? A great example was the pound Swiss, I believe it was Wednesday. It traded sideways all day in a 50 pip box from high to low, trading range. So think simple. Where do I get in? Well, first of all, you need to know why you're getting in. I look for engulfments and pin hammers, and that doesn't matter if it's a trend trade or a reversal trade. When I see an engulfment or pin hammer after a stop hunt has happened, whether that's on the high of the day or in a previous session's profitable trade. So remember, we talk about where is the money, where are the profitable trades. Thursday is a classic example. The BOE, they drag the market down 100 pips and go sideways. Whenever a market goes into consolidation at 50 or more pips of movement, you know there's going to be a move come out of there, whether it's a stop hunt or a trend continuation. And people say, well, how do you know? Well, if it drops 100 pips and goes sideways and starts painting candles in the opposite direction just before the news, they're going to go back and get the money. Doesn't mean you need to get in blindly. What I'm saying is that learn to take a profit, focus on the numbers, understand the average daily range. So when the ADR has been met or exceeded in most cases, as we head into the next session, don't be surprised if the market flips the book and we see tails all of a sudden on the other side for stop hunt in the direction of the trend and a reversal setting up for a move back to stop out traders who are in the money. So they're always going to come back and get the money. Very rarely do we see a day that just drags and trends. Now yesterday's an example. They trended it for the bulk of the day, but what they did do is we talked about the 3-hour windows. The first 3 hours set the high and the low, and then they extended the range out for the next 3 hours. So if you do the math, 6 hours from 2 o'clock is 8 o'clock. Now we're into the 12 candle window for the US session. And what did they do? 50 pip stop hunt back into the trend. So there's always going to be a counter trend stop hunt. There always will be. There'll be a move back against the trend. Not to say that that was tradable on all the pairs, but there was great trades back up and there was great trades back down. And then there was trades at the end of the session on some of the pound New Zealand at the end of the 12 candle window. But again, numbers, those trades come off numbers. So engulfments, pin hammers, timings, round numbers. So we want to see the stop hunt. That stop hunt, again, yesterday's, we're going to go through some examples, but when they come out of Asia, that move up or down, that can be the stop hunt. So it doesn't have to be necessarily a 1, 2, 3 bang and hit the high, hit the low, any of that. Sometimes the move back, and again we talked about 25 pip increments. The market moved on some of the pairs from the previous day's low 75 pips from high to low. That's 3 levels of rise, 3 25 pip boxes before they went sideways on the 1, 2, 3 at the open of the 12 candle window. So numbers, timings, study the box, because the box, like we said, it's either going to be 25 or 50 pips unless they've blown it out already. So you're either trading inside of a 50 pip box for your Asian session, maybe even from the previous US session, or they're moving it in 25 pip increments, 25 pip boxes, break out to the next one, break out to the next one. If you get 3 of those and you've got profitable trades from the previous session, down low or up high, that's a stop hunt, especially when they go sideways and flip the book at the timings with pin hammers or engulfments. When I say flip the book, if the market's going up and all of a sudden the pin hammer and the engulfment or the pins are facing up, That's called flipping the book at the beginning of the session, especially when it drops back down inside of another 25 pip box. They dropped it down, went sideways. The pound New Zealand dropped at 100 pips. So keep it simple. Numbers, that's the easiest thing straight off the bat that I look for to filter out a lot of the candle action. I want to know where the profitable trades are from the previous day's session or the higher low of the day. We talked about this, the blue line, higher low of the day. If one of those is broken, that market has my attention. But if the market moves 75 pips from a high or a low back into the previous day's range, that's either going to be a pullback or a trend. And if that coincides with a stop hunt and then flipping the book, now you're looking at another possible move back to the low or to the high of the day. So hopefully that makes sense. We're going to look at some screenshot examples. The easiest thing that I do that makes things really simple, again, it's all about making things simple, is I focus on the numbers. I'm going to get filled at 75. I'm going to get filled at double zeros. And I talked about placing a limit order in. If the market pins the number and pulls away, I'll get in at the best price that I can based on the confirmation of my trade thesis once that's taken place. So if they don't go through the number or to the number, but it confirms my thesis, they've done a stop hunt, then I either need to wait or place my order into the market. So when I say wait, that means that the trade setup may not be confirmed yet. They haven't gone to the numbers, but they flipped the book, but it still hasn't confirmed my trade thesis, as opposed to maybe a micro double top, a type 1M, a type 3M, a type 2M, or W, whatever that may be if I'm long or short. But I don't just take something because it has a pin hammer there. But if the market's moved 75 pips and gone into consolidation, whether it's dropped down or continued, so again we expect a stop hunt in either direction. 1, 2, 3 timings, hourly rotation, end of the first hour, beginning or end of the second hour, beginning or end of the third hour. Now we're down to 6 candles. So hopefully that makes sense, traders. We'll look at some examples from yesterday and from Thursday from the BOE. Keep it simple. Remember, the pattern, high and low of the day, numbers, timings, okay? 25 to 50 pip increments, measured moves, stop hunt, trap, trade. Hit the stops, trap traders chasing the move, shift the market, and then trend it. Trap volume, stop, hit their stops, and then shift the market on the higher level longs or the lower level shorts, hit their stops, margin their accounts out. So hopefully you got value. Keep it simple, and again, thank you for all the questions. Hopefully that clarifies some things. Worst case, focus on the numbers. I do that all the time to confirm. Just again, I can place my stop, my entry, and my target all in one without any stress. Not worried about chasing the price or the impulse. If it moves further than I thought, I go, oh, I'm not going to get in now. If your thesis, when my trade thesis is confirmed, I'm getting in. If I have to adjust my position size based on the size of the stop changing or something else, I'll do that. So be it. Take the trade, put my stop in, put my profit target in, I'm done. Keep it simple. Simplicity can be duplicated. Get proficient. Duplicate your performance in live time. Okay, entry, exit, stop. That way you eliminate FOMO, fear, hope, greed, hesitation, overconfidence, underconfidence. I'm getting in at numbers. I got my stop. There's my target. We're done. Have a great trading week. Study hard, have some fun, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading, continuing our discussion on where do I get in. Two things I look for straight away every single day are where the profitable trades are from the previous session. And so we have traders that are long off the bottom in New York, possibly. We have traders that were, just open this up, short from possibly from the stop hunt in the after the BOE. So we have traders that are short, and we have traders that are long into the close and the consolidation. These traders may have gone to break even. They've pinned those in Asia. We have our high of the day, and Once Asia breaks through, we have our low of the day. Now, obviously, we have a lower high that's established in Asia. But this is a classic example. Again, I talk about just high of the day and then our low of the day. We're inside of a trading range, but we're also inside of a 50 pip box between 8150 and 8100. So we're in a 50 pip box. The market is consolidated, and then at the end of the Asian hour, prior to the 12 candle Europe-London Open, we get a 1-2-3 sideways engulfment at the high of the day after they hit the stops of the Asian session before pulling back in sideways and dropping down. So this is an example of where they pinned up to the 8150. The next best price is either the close of the candle, because we're back inside of a high, or at numbers. And again, your stop may have had to, if you put it at the high of the day or 20 pips, whatever, but again, when you're filled at numbers, this case it would have been 81.25, so they've pinned to the upper part of the box before pulling back on the engulfment and going sideways, pin hammer for the move through the low of the day. So the point of these is to demonstrate just repeating the process of highs and lows, profitable trades, stop hunts for either a breakout reversal, a breakout continuation, or a breakout pullback in a trading range. Pound New Zealand, we do the same thing. We mark off our profitable trade. So we've got traders that maybe have gone long at the end of the US 12 candle window. We have traders that may be short from the pullback after the BOE stop hunt. And then we draw on our highs and lows. Obviously, the most recent high of the day is broken as Asia starts trading. So we therefore then redraw our highs and lows. And at the end of Asia, the market comes out 1, 2, 3, goes sideways, pins up to the double zeros, which is obviously a stop hunt on traders that were short. So now traders that have gone to break even have been stopped out. We redraw our higher level lows. Traders have gone long, possibly off 50 with the continuation of the trend. The market goes sideways after 50 pip move, pin hammer, reversal, hitting the double zeros, engulfs back inside of the range, pin hammer again. So engulfment, pin hammer, drops down, goes sideways at the numbers for the move down. So again, the market has pinned up to the double zeros, pulled back. So at this stage, it could have been a breakout continuation, but it pulled back inside of the trading range. We got a pin hammer, so there's two candles where traders could have entered in, or I potentially would have considered entering in with a limit order at the numbers. So the limit order allows you, instead of chasing the close of a candle, once this has been confirmed, to get filled at a better price. Maybe numbers plus spread, numbers, or just better than the closing price. It drops down, goes into consolidation again for an hour and a half, 90 minutes, sideways at 50. So another opportunity for traders if they felt that this was a continuation. And it trades back through the low of the day before going into consolidation. And again, the consolidation at the US session goes sideways. They pin through the double zeros, pull it back, go sideways, engulfment now. So again, another example, engulfment, pin hammer, engulfment, pin hammer. We're going to repeat the same things over and over again. They have flipped the book, engulfment, pin hammer at the numbers for 50 pips. Now, obviously, we may not be at the screen for all these trades, but the same process occurs. The market moved more than 50 pips or more, went into consolidation, engulfment, pin hammer at numbers, 12 candle window, 50 pips. Pound Canadian. So we're not worried about, I'm not talking about correlation or anything else. I'm talking about mastering the basics. People say, where do I get in? Engulfments, pin hammers at numbers after the trade has been confirmed. That's what I look for. So again, the same thing. Where's the profitable trades? We got shorts after the BOE stop hunt. We got longs off the low of the session at the end of the 12 candle window. The market goes into consolidation. We draw our highs and lows. Just lower that down. Draw our highs and lows in Asia. Okay, the market goes sideways, and again, you'll notice we're inside of a 25 pip box. It breaks out of that 25 pip box, goes sideways. 1, 2, 3 hits the highs of the trading range it was in, goes up to the numbers. That's a 25 pip stop hunt on this box. If you think in simple terms again, we talked about 75 pips from a pullback, 25, 25, and 25. 3 levels of rise. The market drops back in down inside. It goes sideways, pin hammer at the double zeros inside of our 12 candle window. The last candle of the first hour. First and last candles. First candle was the engulfment. The last candle was the pin hammer for a move down through the low of the day. So again, high of the day, low of the day, numbers, timings, engulfments, pin hammers, 1 bar stop, profit target, walk away from the trade. In pound, same thing. We can mark off profitable trades. Okay, we got a engulfment reversal at the end of the session. Somebody might be long there. We got traders who were short on the US session pin hammer on the continuation. We draw our high and low going into Asia. So obviously we're inside of some highs and lows here. But again, our consolidation initially starts inside of that 25 pip box. So we had a breakout pullback inside of the 25 pip box. It breaks through again the high. Consolidation, engulfment for the continuation. 1, 2, 3. Pullback, engulfment. Okay, so you notice the difference here. We're not back inside of the trading range. The market is broken out and pulled back, continued the move before giving us an inside bar, which gives us a pullback inside of the range at numbers. So some traders may have shorted that on the hit to the high, the stop on high, inside bar at numbers at 50 for the move back inside. Once the move has come through, we now have our extended M formation. If traders hadn't already got into the market, they can short the bull candle. I talk about shorting the bull candle at the numbers. I would look to short, if I'm wanting to get into an existing trend, I will short a bull candle in a down move, or I'll buy a bear candle in an up move, because once they trap this bull, if this is a trend, they will not come back because they allow him to get out of a losing position. The market goes into consolidation, breaks out again, so we break down into a new 25 pip box, consolidation, break out again, continue the move, extend it down, pulling back. So we break the 25 pip box, pulls it back, hits the stops on the short traders, consolidation inside bar, breakout, pull back inside of the 25 pip box again for the extended move to the low of the day. So just study basics, traders. We're looking at some basic stuff here. Okay, we'll look at pound yen. Just again to reiterate, like no matter what I look at, I'm going to duplicate the same process every day. I'm going to mark off profitable trades, the most recent profitable trades. Okay. We're going to mark off the highs and lows. Okay. So we mark off our high. Right. We mark off our low of the day. Even though we're inside of a range, we're going to mark it off. We know that's there, but the market breaks to the high, hits the numbers, stopping out traders potentially at break even. They hit pin to 25, they pull back inside, they drop it down below the double zeros, so they've got to pull back inside of the trading range, but then they also drop it down below double zeros. They go into consolidation at the double zeros, 4 bars below the double zeros, sideways below the double zeros before shifting the market down. They hit the low inside of the box, going into consolidation again, hitting stops, consolidation. People say, well, why wouldn't you go long here? Well, you're in a downward move now. There's been no reversal here. All this is a breakout consolidation. And this engulfment, by the way, if you notice, is inside of 2 bear candles. This is 1 candle. That's the same as 1 candle. That is not an engulfment. If it is, then this move will break through on the next bull candle, which it didn't. The market failed, but we're in an existing down move. So here's the low, here's the high. The market is sold off from the high. They've hit stops and gone into consolidation before continuing that move through the low of the day. And again, coming back to the pattern of the trend, we're basically in a rectangle. We're in a consolidation after a down move, consolidation extending the move. They hit the stops back into the trend, 50 pips, and then 25 at the end for a 75 pip from low to high, 3 levels of rise, 25, 25, 25 for engulfing, trapping traders, shifting the market sideways at numbers, and then continuing the move. So hopefully you got value from today's video, traders. I like to enter in at numbers after the trade's been confirmed. Engulfments, pin hammers, high of the day, low of the day, breakout, pullback, continuation, breakout, pullback, false break reversal, breakout, pullback, trading range. Keep it simple. I can go to the screen tomorrow and do the same thing. That's what's critical. I can duplicate that. The numbers will be there. The high and the low will be there. The timings will be there. Keep it simple. And may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.